Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Monday's morning call. We have a new week. We are in the last day of February, which is an extra day because it's a leap year, so we'll see what happens today. And we got to figure out what's next. You know, over the course of the past 2 weeks, we've been talking about the tactical bull. Ever since that double bottom at 1812, there's been a tactical, methodical move to the upside to burn off some of the oversold conditions that started in January. But, behind the scenes, you have this structural bear since a lot of the damage has been done. And when would, these two time frames meet? And, how can traders switch gears in order to profit from it? So I think that's the question that, I have coming into this week is, has the tactical bull run its course? Or does it have one more little, stampede ahead or not? So, I think that the next few sessions could give us, some clues on what's going to transpire. At least on Friday, the strength was sold after, a big, weekly move. So that got a lot of us flat, just not short. And I want to figure out, how to handle what's going on next. So if you look at the chart real quickly of the SPX, you will see that once again, here was your low, and then you had your double bottom retest at 1812. From there, you had three quick moves to brush back all the shorts, get them all to cover, and then you actually maybe even had some buying. We talked about can this level hold going sideways, and we saw that little red dog reversal on Wednesday, and then you had Wednesday, Thursday, Friday. So it made sense to sell some into that, considering the oscillator was like plus 70. We were extended again from the 8 and the 21 day. You had a decent push above this resistance area, but wasn't very decisive. Okay, but from here to there, I wouldn't think it would be very decisive. If you remember last year, again, we like to look at past patterns. You had your double bottom, you pushed through, we came up to this resistance, pushed through, retested, and then held the 8 and 21 day for another 100 handles. Okay, a lot of people didn't think this could happen. So at this point, I'm not sure, if we're just going to continue to follow these moving averages into, this 1990 resistance, or, is that the stalling point. But, as for now, at least if you follow my rules, and basically you sell into day 3. Some people might have even got a little short, as you had a small red dog reversal here where we pushed above, 1951, which was the prior day high, peaked out at 1963, then sold down. So a little overbought. So I'd say for today, or just say even for the week, this is where I would think, the bulls or the tactical bulls would want to keep some of the momentum here. I'll even make it a little bit bigger if you guys are a little looser. This spot needs to hold, otherwise you better be careful. Okay, and this comes in around 1928 for now, and here is below. If the bulls want to keep, really, really active control, then today we open up red, we go green, we reclaim 1945, reclaim the 50-day, and if that's the case, you would think that we could stair step higher. So we shall see, what goes on. The futures were down like 15 handles at 5 a.m. and now they're only down 6 or 7 based on the fact that, China is cutting their reserve requirement again, which probably isn't good news, but the market thinks that, central planning and all that kind of stuff is still good. But I have a feeling there's a lot less people thinking that as of now, because it hasn't really done much except for boost up stock markets in order to, create this feeling of wealth effect that didn't really happen so well. So anyway, the question is, what other sectors, could we trade or in play? And they're all kind of acting a little different. Today I think the futures are off lows because of oil. Oil is not down much. Not too much fireworks around oil right now. You look at the USO, it did open up on Friday and went red. Okay, another type of, not say real failure, but it after 3 days, it's oil. It's not going to continue. But anyway, at this point, the market probably won't say too much about oil unless it were to get below these 2 points. Whoops, I'm not drawing my lines very effectively here. All right, so just say this low here for the USO is 870. As long as we stay above 870-ish on the USO, I don't think that oil is going to be spoken about 10 times a day on TV like it always is. And regular oil is like $30. Just as long as we're above 30, oil could continue to act well. The XLE has been acting well for itself also since the lows. Ever since it broke down well above this. Okay, it's been a decent trade off the lows, and at this point it's not that compelling, but it's still hanging around. Yeah, this little tight spot here, if this were to stay above the 8 and 21 day, which are reclaimed, right around, like just say this 56.5, and go sideways within this upper area, you can almost draw this like this now. You have a little bit of a channel here. Let's make it bigger, because like me and my old eyes, I wouldn't be able to see that if I were you too. So, above the 8 and 21 day, so much resistance higher. In order for this market to continue to have this tactical bull, you would think that perhaps this low here, or this area 56.50 holds for another push. And unfortunately, that's what we're all looking at right now is, can we get another push? And then at what area can you sell it? You go to the Qs have not been leading this move. The Qs have been in defensive mode to start the year. You did have a decent move off the lows. You had that engulfing day here on that Wednesday, giving you some clues, to be long. And you had your 3-day move, and this actually couldn't get above the 50-day at the first time. So I guess we'll see, if it were to try again. And I'm just going to have the same kind of narrative here, where as long as it's above, the 8 and 21 day now, maybe we can continue to grind higher. But once we get a decisive close below this, I would have 1 foot in the door, 1 foot out the door, and get out fast, just in case, things start to weaken. So at this point, you want to talk about for the week. I would say if the market's any good, or the tactical bulls want to keep control, you would think that the Qs want to stay above this like 101.84 to 102. That's probably your spot there. And you look where we came from, boom, and then, not a heck of a lot of room anyway up into the 200 day there. We had a few successful trades in the Russell. The Russell actually, was a little bit stronger on Friday. It's been so battered and bruised. You had your 4-day move, and then this nice sideways consolidation. We talked about can 99 hold on Wednesday. It did, and then it actually even cleared this 102 area that we were talking about, and didn't sell down too much on Friday. So some relative strength now in the Russell. We'll see what that means. We'll see how long that lasts. Ultimately, it's been very broken. We've talked about all these different, ascending channels breaking. Where was this? This one maybe up here. This one into here. Another one there before the start of the year. And now we're just retracing. So if the market were to stay somewhat bid for, okay, this does seem to have room up more towards 107.50 and maybe even up to here, but it's not going to do it on its own. But it's a good sign. Usually when we kept selling back down to lows, the Russell fell apart first, and that's not the case here for now. I would also use the same concept that I talked about with the 8 and 21 day. As long as it stays above it, try and be opportunistic to the upside. Once we break and close below it, the music could end. We were talking on the VTF about how the IBBs are really lethargic, not doing much. This too loves to trade in ascending channels here. Here's when this one broke right there with that wide range bar. Here's another one. Here is another one. And now, it's getting tight here. Last time it lagged and got tight was right in here, and it just broke down. It was the first group to break down. So we'll see, if the market wants to, bounce this and play catch up, or are we going to turn lower and will it be the first group to make new lows again? So it is getting tight, and at least we like when things are tight. So at this point, you could put it into a setup like this. If you want it to be long, you'd be long versus 256, and if we happen to get some kind of close, a very, very decisive one above, just say 265, maybe you add to it for a trade. But I remember trying that here, and it failed fast, and I lost money, but it could have been a heck of a lot more money. So we'll see what happens here this week on the setup in the bios. The banks, every other day it's a little different. Jamie Dimon's big purchase helped give a little bit of a catalyst to the upside there, but then it lost. I'm not saying it was a leader, but it was a leader for a few days. So anyway, the XLF, has a little bit of a doji, I guess you could say, from Friday. Here's your 8 and 21 day, a little bit higher. Just keep drawing these lines wrong. So I would say as long as the XLF holds above 21-ish, it's still okay and could help, be a bit of a tailwind. It never made a new high from February, which some things have already done. JP Morgan's tight, so you could even look at that. You had this doji from Friday. You had the S&P last time. With the S&P came up to the 1950. This was here. Now we went through 1950, and it's down here. So little relative weakness there. I would say watch this spot. The low from Friday on JP Morgan is just say 57. If it stays above 57 and goes sideways, maybe it could help lead a further bounce in the banks. But if it were to get below this and stay below this, it's just, a rangy type action trade, and can't look too much into it. You did get a nice calculated trade from the red dog reversal into the gap here. Gave you 3 days, so a pause makes sense. Just the question is, I don't know if there's enough power to take this spot out, and that'll be good to see for the market. High beta tech, a lot of range vehicles. I discussed with you how when that trade changed, when FANG lost momentum, you can no longer just buy a dip, you can no longer just sit in it and trade a tier system around it, that you have to do 2A action, and that's been paying off for people. Sometimes we're getting 1 or 2 days, sometimes 2 to 3, sometimes a half a day. So on Friday, a lot of the high beta names on, I would say in the first hour just ran out of steam, and then as soon as the futures turned lower, they went red, and now they're opening red. So maybe, they can go from red to green today for a trade. That's basically what's been going on. Let's go to Amazon first. Amazon, not the best move, but it's been trying to move forward or come off those lows. At some point, from the last 2 weeks, it's been a better buy than a sell. Obviously, for the first part of the year, it was a better sell than buy, and now we're getting into this middle area where, I'm not so sure. Probably a better sell than buy, but anyway, it did go red, couldn't push up. I thought perhaps it can get some power on Friday, and it didn't, to see moving averages. And now it's really just not that compelling. It depends when they put their buyback machine on. But anyway, if you want to just use the 8 and 21 day like we're using for this narrative, as long as you're above it, you try and stay long. Well, here is support, 546. Because of 546, I think some people will start to lose faith, but this needs to hold for this to stay intact. There's news on Google on watch Intel's case against the IRS about how it treats, I guess, its stock options for employees. Here was your breakout failure there, and ever since it's been acting pretty lethargic. But if Intel wins, they say this could be like a $3.5 billion windfall for Google. So if that's the case, maybe it wakes up a little bit. But I guess if Intel loses, I'd also watch that. It did fail again here, in closed week. I don't know what's really going on here in Google. There's just not a whole heck of a lot. It's getting a little tight. Just don't overtrade it there. And it's not that compelling. Watch that case. I guess if they win the case, maybe there's some kind of trade here through this, 736 with some kind of authority, and that would probably be good for high beta tech. If Intel loses, maybe give this another excuse to try and break this more to the downside. So stay tuned. Netflix was actually pretty good to me last week. I was calculated, and then, just like I said before, range vehicles. It was a good buy on this reversal here, but then on day 3, a better sell into the 200-day, and now it's opening down a little bit. So if this whole range vehicle narrative stays into play, maybe it's buyable into this 92 to 92.90 spot. So that comes in right around here. Let me get my little pen for you. Right there, boom. I got to start moving right into, this spot here, topping tail. So if you got short into the 200-day, you made some good money considering, where it came from, or if you just got out of the way, that's good too. So now we'll see if this is any good. This needs to hold around this 92.50. Tesla, really, feisty move off the lows there. Lots of shorts, tied up in that name. So when it goes and they have a little bit of a bid, they get squeezed. Here's when it broke. Bit of a V bottom here, down to 140. But now it's coming into, a spot that's going to need a lot more than just shorts covering. I think this 197-ish. I guess there's a small chance that it could get up to here, but the market's going to have to be strong for that. But all in all, stutter stepping higher. I would not be chasing it up here, but anyone who started shorting it down here is probably like, what do I do now? So here's your spot. I would write down this pivot, 192, above 192. Maybe you could get 197.5. But, there's been a lot of intraday moves too, as far as like, on the 3 and 5 minute. But anyway, here's your 8 and 21 day, trying to be consistent with you. As long as it's above that, bears can't growl too loudly, but as it gets extended into this noise, just make sure not to chase it. It's funny, some people out there, love to make fun of technical traders or technicians or strategists if you're not an economist or you don't have a huge analyst team. But anyway, I think the technicians and the traders out there who've been watching the moving averages with the whole thesis, if you're above the 8 and 21-day moving average, you try and stay long. You just don't short it because chances are, you might run insolvent by the time the intermediate bear comes back. Same way, starting the year and in the beginning of January when we were below every moving average, there was no reason to have crazy risk on because of the technical damage. And if you didn't, you were able to embrace the volatility. But anyway, that's all about that. Let's talk about some social names. Facebook kind of reminds me of the Amazon, just trying to stair step higher. This also is something that I turned to. I did get long into this, Wednesday move, and I got out into Friday's move, and you did get a small little reversal here versus this pivot. I guess it's the same concept. Stutter stepping higher. You could see how it's, from one day to the next, there's not much continuity. You're getting here was a day and a half down. This one gave you 3 days, and now down. So at this point, I don't think you press shorts until you see really the market change. But into these pullbacks, it's been better to buy. I would say first spot is 107 to see. I come in with no Facebook today. I sold above, I don't know, somewhere above 108 and change. So I 107 and change. Maybe take a look. We're here. What is this moving average? This moving average is closer to 106.20. So that's my thought for today. Is that if we do pull back and the futures come back and try and test the overnight lows or something like that, this will be my spot to see if we could buy and hold, kind of like what happened here. But one of these times, it might close below and break this ascending channel, and then you do not want to be buying a dip. You want to get out of the way, maybe get short, and then see what's next. LinkedIn's been just bumping up a little bit here. Just you can't really say much about this except for it is what is it? $22 off the lows, which is a decent move, just where it came from. We've been talking about how it might want to kiss the earnings gap pivot. Well, it's getting close to it. That's right there. If the market hangs in there, it could still continue. And this is 128.99. Twitter, since the washout lows, has been a small little trade for some. It did wake up. I remember that day after earnings, people I want to be a buyer if it gets above 115. If you did, good job. From 115 back to almost 119. But now I would say here is your 3-day pivot. Needs to hold this to keep any kind of interest whatsoever from traders or from anyone who's holding it. This is your closer look there. You had your wide range bar, took back the 8-day, took back the 21-day, got a little extended. Now the question is, can it hold in there for a little bit more? If it's going to have to hold this 17-11 pivot, or the 8 and 21-day. Apple had its shareholders meeting. This is just very boring. This has been such a boring, lethargic, weaker stock for so long. I used to make good money in Apple, and now it's like a nothing. This broke its ascending channel here. Stock lost a 200-day there. So ever since then, I don't care if it's Apple. It's been just a very selective trade, and that hasn't even been good. You came down, you had a little bear flag, continued to the downside, and now you still have this 92 support that's holding in there. So as long as it stays above it, bears can't growl too loud, but it's not like there's a heck going on here, or a heck of a lot. This is kind of tight, so maybe with the event, it could try and push through it, but hasn't happened yet. So just don't overtrade Apple. There hasn't been a heck of a lot of opportunities there. The metals have been pretty violent and a little erratic lately. Ever since the peak, when the GLDs hit that 120 and change, you had a lot of back and forth type action, which hasn't been that methodical, but it is still ranging. It got very extended from all the moving averages into that peak, and now it's been kind of letting the 8 and 21-day catch up. So something could happen here soon. Maybe I can grab my pen even sooner. Here we go. This was your first. This is the 21-day, which is still above. It's still riding the 8-day, which is somewhat healthy. You have your high, your lower high. So it's just in this range, trying to absorb a big move, and we'll try and figure out what's next here. If you're trying to trade it from day to day, it hasn't been easier. It's opening up a little bit today. See if it holds. The TLTs have been also a pretty erratic range. You had your remember this crazy buying that went into the February 11th low, and it sold off. Then you had another one. This 21 day has been holding. since this top was put in right here. So if this were to break to the downside, maybe that tells us that the equity market has another leg, a little bit higher, and maybe you want to be in some banks. But as of right now, it's been holding. So you have 130.04. If it breaks that, it's below all the moving averages. Then you have this little low here of 128.71. So see what happens here. Some would think that this could be even like a little bit of a, I don't know, wow, look at this, a little head and shoulders top with a neckline slanted. So below that could bring in some sellers. And I don't know what that's telling us with the market, but it's probably, telling us something, and we'll figure that out next. So all in all, it is Monday morning. The futures were down 15. Down 15, I was like, ooh, okay. From 1963 down to 1935, maybe we get a quick buy in the morning for the tactical bulls to protect the market. But as the morning progressed, with oil bouncing a little bit and the Chinese rate cut, things are off lows. So I don't think you could just buy them right away. Maybe we go green and get a little push and we'll figure it out for the range. But you would think that you want to be a little patient just in case they revisit those lows, because again, like I showed you, if all of a sudden we don't hold them, all of these time frames between the tactical bull, the intermediate bear, and this and that could start to come to a head, and we could see some of the recent composure change. So you don't want to start buying too early if that's that. Same way you just can't short today, because I don't think it's clear cut whether or not that 1962 is going to be the high of March or not. So for today and tomorrow in the next few sessions, we'll see is there commitment to the recent move? Can we work off the oscillator that was plus 75, that's probably plus 50 still, and then see some tight setups put themselves out there, so then we could trade them with a high probability and a low risk, because that's what we like to do. Have a great day. I'll see you at the recap.